Hey folks, how's it going? Um, I'm here today to talk to you a little bit about what's happening to Ethereum. I've been on all the all the different Reddits and the twits and the tweeters and the twitters and the uh, and been reading all the stories about what people think is happening to Ethereum. And what really has prompted, I've been thinking about doing this video for past couple of days. What really prompted me today was just watching. One guy had commented that, folks, it's the shorts. It's the shorts. Pay attention to the shorts. And of course, this was in a discussion where everyone was talking about, soft forks and hard forks. And look, I'm not going to convince anybody, honestly. I've tried before, I've tried over and over and over again to try to explain this to people with different coins, actually, because what's happening to Ethereum has happened to other coins too. This is what I call it, like a trader raid on the price of Ethereum. I'm going to get into and explain to you what's going on here, and hopefully by the end of this video you'll have a real clear picture of what's going on here. Now, I'm not sure I'm going to be able to convince a lot of people, but at least for a lot of you folks out there who are traders, you're going to get this. You're going to see it loud and clear, and you'll know. Maybe you can take some time to try to explain this to others, because there's a lot of folks out there who are really good with code. There are a lot of folks out there who are really good with understanding blockchain and all this stuff. And when it comes to trading, it's like when if you're a plumber, everybody's a plumber, right? Everybody knows everything about plumbing. They don't need to be told about trading. Until a pipe breaks, and then they got to call the plumber and they can't fix it. But anyway, so I just want to start with a few things. First of all, the standard disclaimer. I got to admit, I kind of ripped off BitBit's disclaimer and kind of applied it to me, so I don't want to be accused of plagiarism here. But I'm not going to flash some, like a 2-3 second disclaimer in front of you, because I think what's in here is very important, and I think a lot of people overlook this. So take some time to read the disclaimer, okay? And the main thing is that I will never, ever, ever tell you to buy or sell a coin, okay? And it's for this reason. Cryptocurrency trading involves a high degree of risk, okay? You have to make your decision whether or not you are going to do this. I am not a licensed financial advisor of any type. I'm just here today to kind of share my opinions, all right, about Ethereum, especially today. Last part here is pretty important. I may or may not own any of the cryptocurrency I have discussed today. Actually, right now, I don't own any Ethereum. And there's a good reason for it, because if you understand what's happening, like I do, and if you're frustrated, like I am, that people can't see this, and so they're just going to be the complete victims of this trading raid that's currently going on in Ethereum, then you got no choice. You got to get out. I mean, you can't just sit there and decide to lose money, okay? So one of the first things I wanted to talk about cryptocurrencies, is that they're very immature markets. They're not very liquid. The exchanges are kind of, I'm not sure. A lot of them are pretty questionable. Some of them are pretty good. The ones that are really trying to conform to regulatory bodies are turning out to be quite good. So, but they're all still babies compared to other markets. And one of the things you have to remember is that In cryptocurrency, there are no market makers. Now, what's a market maker? Well, a market maker, you know, they make money, true, but their main responsibility is to try to maintain a fair and orderly market. And so, like, even in the more mature markets, like Forex and things like that, stock market and other stuff, the algorithm trading is taking over and there's less and less market making, but there's still enough out there. And this is a problem that's emerging in other markets too, like even in the mature markets, because the market makers are just kind of disappearing. It's being replaced with algorithmic computer trading. And I think it's a pretty dangerous trend, actually. It's going to get to be a problem in the future. People are ignoring this, right? This is especially true in the futures and commodities market. They're starting to have some problems even now, realizing that the old, what they used to call the locals, who made a market in these various futures and commodities markets, were pretty valuable things, and just turning it all over to the computers wasn't necessarily the greatest thing in the world. There's been a lot of questionable things going on, but it's going to continue. It's the trend, and hopefully they'll iron these problems out. But I just want to show you guys something, what happens when there are no market makers. So, down here, this is the Swiss central bank. It had decided to abandon the peg to the euro. Look at that drop, folks. So here's another similar drop, and you can see the difference here, right? There's a little bit, it's a little more orderly, and it comes back. And when the Swiss bank abandoned the peg to the euro, it dropped about 3,000 percentage interest points, which was a huge move in the futures market. But the interesting part about this is the market makers just completely abandoned the banks and the investment banks. They just walked away. They didn't cover any trades. And so this is what happens, guys. No market makers. These are the kind of things you can expect, right? Hey, let's look at Bitcoin, right? So it's a little more, it's the most mature of all the cryptocurrency markets, but it's still, in terms of liquidity, and of course, there's more algorithmic trading and stuff going on like that, but there's still no market makers, And so you're used to these drops. You've seen these. And what's an interesting thing is that this pattern right here, where if you follow my cursor, we shoot up and then we go kind of straight down. This actually is a pretty common pattern that emerges with a lot of altcoins too, right? Well, why is that? Well, there's really nobody making a market in these coins. And it's a problem, and I'm going to explain to you why there's a problem sort of later on. I want to jump, and you guys can look and see, here's Ethereum. Wait, let's go back here. Let's just go to DEX, and we'll look at BTC. No, we won't. We'll look at Ethereum BTC. There we go. Yeah, okay, so let's look at, let's see if we can see the date chart. By the way, guys, this is let's look at like a 3-hour chart here. Wow. So again, no market makers, nobody really trying to defend this price at all. This pull down, and kind of a scary drop. So it's you can go back and look at this chart a little bit more, but it's pretty much doing what Bitcoin did, right? This is drawn out a little bit longer because I guess, let's see, GDAX is just sort of offered Ethereum, so there isn't really a lot of data on GDAX, but you're kind of getting the picture here. Here's kind of a real interesting top up here, a recent top right up here above 29,000. 290,000, excuse me. So, yeah, same deal, right? No market makers. Well, you know, these things happen, and they happen in other markets too. You know, market makers don't always help anything. But when you've got a crisis, you got a problem like this, people who get behind blockchains really need to figure out how to back their currency, in the sense that they need to be able to defend their currencies, their cryptocurrencies, their coin, or whatever you want to call it. They need to try to defend these things a little bit. And I think probably right here, up in here, you're seeing some members in there. It's kind of a weak effort. It's an amateur's effort, from what I can tell. Right in through here. Let's see if I can just circle it for you guys so you can see, yeah, where it came up from here. Yeah, let's pick another color. How many crickets? Let's look at, yeah, I think a bright. And I got a lot of red on there, so I think. By the way, guys, this is the Coinity charts. They're just awesome. I don't make any money plugging them, but I plug them all the time. I freaking love these guys. So let's do blue. There, that looks a little better. Okay. So yeah, it looks like they're trying to, there's some effort, probably, maybe the Ethereum group or the DAO group, or they're doing something to try to defend their coin. It's kind of amateurish, right? But that, you know, all of this doesn't really address what's happening. Okay, so let's go back to the history of what's going on. So when altcoins first started coming out, you know, the pump and dumpers, the guys who used to, probably they did this in penny stocks and stuff like that. Well, they jumped over to altcoins. I mean, they looked at those immature markets and lack of liquidity, and they just said, oh, this is perfect, you know. So over time, they've developed, and this time, they've really created a pretty sophisticated process here. You know, they all sit around in Skype rooms, you know, a lot of them young kids, and they all think what they're doing is perfectly legal. I got to tell you, it's probably not. And this time especially, because, you know, before, a lot of these altcoins never got on the SEC radar or any of the other three-letter word or three-letter agencies out there. You know, like SEC, you know, they're not going to be interested in market caps of 300,000, investors losing a couple of 100,000 or something. But 150 million, that gets on the radar, you know. And right now, you're not hearing much from the regulatory authorities, but I guarantee you will. Now, the first thing they will do, I've been in this business a while, guys. The first thing they're going to do is going to be kind of a warning, and they're going to try to see if Ethereum will self-regulate. Okay, it won't be just Ethereum. They'll be looking at this with other blockchains too, especially Bitcoin. If they don't self-regulate, then they'll step in. Now, you know, right now, you know, people always criticize the government and crypto, right? Whatever. But you know, at least they did decide, I think, this time, the regulatory bodies anyway. I don't know what's going on behind the scenes and the underhanded tricks that are probably going on, but at least the regulatory bodies have tried to keep a relatively, you know, soft hand on some of this stuff, because they realize this is a budding industry. And if there's, you know, anybody in the Western European countries and in the United States and everything, if anybody knows how to let industries grow, it's these governments. They got a keen understanding of how to let industries, especially the cryptocurrency and the blockchain industry, just like what they did with the internet. They're going to let it grow and try to keep their hands off, but they're not going to sit around and let this $150 million problem become $1 billion problem. They're not going to let it become a threat, all right, to the overall economy. So they're going to be looking. There'll be a couple of shots fired across the bow, folks. I'm telling you. And it will come to the whole cryptocurrency industry, the call to self-regulate. And if you don't self-regulate, well, you know, what can I say? they'll do it for you. And I don't think a lot of us want that necessarily to happen. And one of the things I always like to tell people, nobody likes the sheriff. They don't want the sheriff in town. They hate the sheriff until they get screwed. And then the first thing they do is pick up the phone and dial 911. Okay. You can listen to all these people who say, oh, I'm a crypto anarchist and whatever. It happens over and over again. All I want is freedom. I hate socialism or whatever, get the government out of this. All right, fine. But then when they get screwed, they call the sheriff, right? Come help me. So the other thing I want to tell you folks is that no matter what you may think, this is to Bitcoin. If you think this isn't coming to Bitcoin, or it's been done, it's been tried before, I think. It'll be done again, and they'll try. And the key here is just to just disrupt the Bitcoin long enough to, get a short in, right? And you can do this in all sorts of ways. You can do margin trading. One of the things that people are overlooking is the 500 to 1 leverage that some of these contract for difference brokers offer, right? Some of them are offering 500 to 1 leverage on Ether. I don't know which one specifically, but I've seen it before. So I mean, they don't even, a lot of the things, like when the early days of this, when this crisis broke out, a lot of you were trying to get the exchanges to quit, right? Or, just, stop trading. Man, that's just stupid. Don't even ever think of that. Okay. We just had a recent example of that with China. China tried to close down their stock market, and boy, that just made things worse. And let me explain to you why. Okay. The reason why is because you, as an individual investor or trader or whatever it is you are in these markets, right? You don't like to lose control of your money. So when somebody says to you, your money's frozen, well, that just scares the crap out of you. And it should. It does me when somebody tries to pull those kind of tricks on me. So what happens? Well, when you restart trading, it falls way worse than it ever did. So the most you can do is, like when the commodities markets used to have circuit breakers, I think they've still got some in there, here and there. And so they don't suspend trading, but they don't let the price fall. They have what's called limit up, limit down. But that's about the extent of what you're going to get. So you can't take trades that are at the limit, either limit up or limit down. You're not really going to see much of this stopping trading because it's just crazy. It doesn't work. So one of the really big mistakes that came right off of was this suspending trading idea, which was just nuts, guys. I hope you don't do that in the future. And I was really encouraged by the fact that a lot of the exchanges just said no. And of course, that's what they should do, right? And you can't ask exchanges to confiscate accounts. They have no legal authority to confiscate accounts. You think some account may be stolen, but the fact of the matter is, it may not be. Who's to decide, right? Who's to decide? Are you going to ask a Bitfinex to be judge and jury? No, right? And the other thing is, I noticed initially most people said, well, the margin trading's on Bitfinex, right? So, no problem there. Let's just go grab the shorts on Bitfinex. But what about the guys who were short and had no idea what was going on? You're just going to go grab their accounts? No, you can't do that, right? You're trying to ask the exchanges to sort all that out for you? No, it's not. You're going to say, well, we only want the stolen coin. Well, exchanges are off blockchain. So how are we going to trace all that? It's pretty shaky stuff, right? So you don't stop trading. What you got to do is, get in there and kind of just provide an orderly market, right? So what's happening here? I just want to get to it. I know I beat around the bush, but you kind of have to stretch your mind a little bit to kind of understand how markets work, I think. And so what's happening here is, so the guy siphoned off some money from the Dow fund. Okay, siphoned off some ether. He put it in what's called a sort of a child account, or a child Dow, that they call it. And okay, great. Now the money's stuck, right, for 30 days. And so now they're proposing a hard fork, all right, or a soft fork first, and then followed up by a hard fork. I don't know how that's going to work. It looks like it's going to be a pretty messy proposition, which, either way is going to hurt the value and is going to help these people who are the shorts in this market, who pre-planned this, obviously, I think. I don't know who did that, but I think this was a pre-planned attack on Ether, and it's not over by a long shot. So one of the things you got to remember, while you're busy soft forking and hard forking, trying to keep that Ether in there, the value of that account is going down, all right? So in effect, these guys who are short, and I got to repeat this, these guys who are short probably will never, ever, ever, ever have to get the coin, or even care to get the coin in the Dow fund, okay? Because it's going to be worthless by the time they're done. So in effect, what's happening, and I'm going to repeat this, what's happening is the Dow fund is being, look at it, is being drained. I don't know, you guys know, you can go buy some 3 million Dogecoin, and it won't even cost you half a Bitcoin, right? So who's going to care by the time they're done with this trading raid on the price? And folks, they can take this all the way down to 1 sat, and I'm just not kidding you, right? And still make money. It's just not funny. And all they have to do is just disrupt things. They don't even have to try to actually seize the money. They just have to look like they're putting up a fight, right? And then you guys panic and you start selling. See, this is what's been happening. So here's kind of a comeback, but if you'll notice, right, this is a 3-hour chart. So this was the day today, right? But if you'll notice, these guys were pretty quiet. So here was kind of the first drop, and then there was a little bit of a pullback, and then another drop down, okay. And now we got kind of another pullback. Well, this drop down was yesterday, where everybody was, the Dow attacker was pretty vocal, right? Oh, he's going to put up a fight. He's talked to his lawyers. He's done all this, and look, bang, 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 bang. So he just drained a ton of money out of that Dow account in terms of value just by disrupting things. Now you got to remember, if he was interested in getting the actual funds, right, that's getting the actual Ether that's in that child Dow, if he was actually really truly interested in getting that, he wouldn't be getting on there and screaming and yelling. He'd be trying to preserve the value, right? Listen to me. He'd be trying to preserve the value that's in there of the Ether, right? It's in the wallet. He wouldn't be trying to drop these prices down. And look, these guys don't even have to be short. Look at this, because they know you guys. This is the thing. They know you're going to go, oh, look, it's quiet. Looks like I can get back in. And you say, oh, look, Ether is cheap. I'm going to buy in. And look, you got a beautiful spike like that. And then what happens? They sell into it, right? Right? Listen to me. So they bought down here, and they got a pretty little price spike on this candle, and they sold into it. And then look, here's another one. They're bought, and they got another little price spike in. They don't even have to short these things. So, and these guys sit in little chat rooms, and they just, wherever you are, whatever your account is, and they yell, buy now, sell now. It looks like a coordinated assault to me. And they've done this with other blockchains, guys, and I'm just not kidding you. I don't know who it is. And I think a lot of them think what they're doing is perfectly legal, as I said before, but it's not. They may think it is, but it won't be. And especially when this gets on the SEC radar, I don't know what to tell you. So what you got to do is step in. How do you do that as a decentralized blockchain? You know, I've thought of different ways. I could get into it later. You know, I'm not buying any ether if people, and especially if people really start to go with this idea. I'm just going to stay out of it because I don't want to be viewed as a pump and dumper either. I'm just trying to tell you there's a way to do it. Now, I know a lot of you have been, you know, taking the market orders and trying to spike the price back up and trying to encourage other buys. But guys, they're just dumping into that. Okay, they're just dumping into any price spike. All right. So I hope Bitrix is going to let me get back on here. Great, isn't this awesome? Let's go to the ether. What do you do, folks, with this kind of problem? Now, I've worked with another altcoin that had this problem. And, you know, you just couldn't convince anybody. It's hard dealing with the public when they don't understand trading. So I'm not sure you're going to be able to convince anybody, but at least, you know, for you guys who are traders, you'll be able to see what's going on here. So, interesting thing about Bitrix, fellows, ladies, why I like it. I think if you try to make a market just in one market, focus on it, you know, let the ARBs bring the prices back on the other exchanges, right? So on the ask side, I know a lot of you guys have set up buy walls and sell walls. Or you set up sell walls. They're in here somewhere. I have to go through and look. I spotted one. It's not on the first page, but it's up there. So, and then you've tried price spikes. So the problem with buy walls is, you know, they work for a time and they create a range, a trading range. But then when you bust through the range, there aren't a lot of, because everybody's got their orders in between the buy wall and the sell wall. There aren't a lot of big orders above and, you know, below the wall. So when the wall gets broken through, you get a really precipitous and ugly drop. So that's the problem with walls. And then the other one is price spike. So, you know, you can use spikes if you want to try to spike the price a little bit. You know, if you were doing it, if you were acting as a market maker for Ethereum, right? If there's somebody out there wanted to do it, someone who was with the Ethereum organization who wanted to make a coordinated defense, which I think blockchains need to do, guys. They need to make coordinated defenses of their currency, and they need to learn how to do it, of their cryptocurrency. It's just going to be the way it is. And you should get out there and defend the value of your coin, right? But how do you do that? So yeah, most guys, they try to set up buy walls, sell walls. I don't know. Yeah, works a little bit. Who knows, right? So, but what a lot of guys do to do that, right? So if you look at the total is how much Bitcoin it would cost you. So here's one. This is going fast, so let's go down first to 153. All right, this is still moving pretty quick. Ether moves great. I love it. So I hate to see Ether go, by the way, guys, because it's pretty liquid. It was getting to be a mature market before all this happened. It was kind of one that I could trade, you know, but not anymore, not right now. So if you wanted to buy 153 Ether, now it's 151 at this price, it cost you 0.8 Bitcoins and change, right? But the thing is, if you want to buy up higher, all the Bitcoins up higher too, that's the total. The sum is all the Bitcoins if you were to take all the orders above, both that order and the one above it, okay? So like if you wanted to buy down here and get all the coin all the way up higher, it would cost you 6 Bitcoins. Now it's 5.6. You know, it's moving fast. So, okay. Right? So that's how people do the price spike. They just take this order, this order, this order, and you can go up and look and see when they do it. You know, you'll get a candle that'll just keep growing and growing and growing. Right? That's how the pumper dumpers do it. And that's how guys who are trying to create a little price spike to try and encourage more buying do it, especially the bots do that. So, okay. the real way to do this is a market maker idea. And the market makers, what they do, in this case, if they were trying to defend a price, there's an old saying in trading, you know, the bread is in the spread. So there's the bid and the ask, right? That's the spread. Yeah. And if you were trying to defend a price, you'd have a buy, you'd have a bias towards the asking price in the spread. So let's look at the bid, pretty similar. The difference is down here. So we're looking at like maybe 3,000 some odd, no, 30,000 some odd sats difference in the bid and the ask, the spread. So what I would do is actually go a little closer to the asking price, because each time, so that pushes the price up a little bit, right? But it doesn't create a spike, right? Because any spike you create, they're just going to look for that and they're going to dump into it, guys, right? So I'm not suggesting anyone do this, but I just thought I'd kind of show you how you could conceivably defend your price. Now, you're not going to push the price up. I mean, you could probably spike the price up and then try to defend it, but I wouldn't. I just try to keep low, stay at the lows, and just try to slowly defend with a bias towards the ask, so that you just sort of creeping up a little bit and they can sell into it a little bit, but they can't do these wholesale dumps, right? You know, try it and see. That's one suggestion I have for you. But, you know, a lot of you guys who care about Ethereum, this is your chance. You know, I know a lot of you are doing your best, but if you're in there and you're taking these market orders, you're going to run out of Bitcoin really fast, right? If you're down here hitting these little blue arrow tabs, or taking a market order over on GDEX, and you're going to run out of Bitcoin very fast, whereas you can conserve your Bitcoin, right, and take a little bite in the direction of the ask. That's just my suggestion. If you guys want to get a group of, maybe you could elect them, right? You know, maybe it's something you might have to submit to the SEC or something, or clear with the SEC first, but say, hey, we want to make a market in Ethereum. See what they say. I don't know. See what you could do to, you know, some kind of a decentralized effort where you guys vote in a bunch of guys to trade and defend Ethereum. So it's going to take that kind of thing, because what you're dealing with is exactly the same thing, only illegal, right? These people are just dumping, pump and dump when it's not legal. That's so wrong. Okay. They're not going to go after that DAO wallet. You want to do the hard fork or whatever. I don't know what to tell you. Go ahead, I guess. I don't recommend it. You want to blacklist? Go ahead and do it. I mean, the thing is, that money, by the time these guys get done, that DAO wallet, and this is the important thing, ain't going to be worth much. It ain't going to be worth the effort, right? And then there are going to be a whole lot of very, very upset people. Can't say that I blame them. So if you guys are listening, the folks at Ethereum, the foundation, that's my plan. That's what I would suggest. You got to clear it with regulatory bodies. Call them and see what they say. I don't suggest just doing this. Say, hey, you know, we're thinking of making a market in Ethereum. What, you know, can that be done? You know, and maybe you could get some guys who probably know more about market making than I do. But you got to defend your price, and you're not going to the next set of crap that these guys dish out to disrupt things, or they'll drop the price further. Yeah. Probably, from what I understand, that there's some of these, you know, some guys have figured out that probably there's more vulnerabilities. So probably they'll hit it again for, you know, another couple of million, and this price will drop down. But they're not really after that coin, unless they can grab it and dump it on you, which a lot of you I know are worried about. But I mean, they're already draining that wallet. They're doing it every day, and they're doing it on the exchanges. Okay, they're doing that every minute. I know what they're doing. You guys listen to this and understand it. I really think that blockchains, I mean, you guys are so great with computer code, but we need to pay more attention in the cryptocurrency industry to the trading stuff that's going on. We need to curb this stuff, guys. We need to figure out a way to do it as an industry. I was so disappointed, and I'm serious. I was so disappointed in the way Bitcoiners have been responding to Ethereum. So, and the way I liken it to is like if you had two football teams, that were rivals for years and years, like a high school football team that are rivals. And, the quarterback's mom dies on one of the teams, and so the other rival team celebrates and tells the rest of the guys, see what jerks you are, The thing is we are in Bitcoin is within an ecosystem. It's an ecosystem within an ecosystem, guys, and it's called cryptocurrency. And if you don't think this kind of stuff can come to Bitcoin, you're naive. If you don't think we as an industry need to address these issues, you're naive, okay? This is the time where, rivalries are great, competition is wonderful, but at some point, there's the Bitcoin ecosystem that's within a larger ecosystem, and that larger ecosystem of the cryptocurrency industry has got to start addressing these problems and self-regulate. So that's all I'm going to say, and I know I'm going to catch a lot of flack for saying it. I'm a lot older than you guys, I guess, and I've seen a lot more than I know. Everyone hates that kind of talk, but industries grow in certain ways, and that's just the way it is. Globally, nationally, however you want to call it, it's just the way we are working inside a global community, and we've got to kind of toe the line a little bit, self-regulate, get these pump and dumpers out of there, start having more more fair markets, more liquid markets, healthier markets. Do what we can to develop these markets. I really wish we could do we could do blockchain transactions only, blockchain trading only. That would just, bring a lot of transparency to everything. Or even if the exchanges would just do like some side chain or, a private chain or something between them to start having some transparency. That would be a great idea. But for now, this is just a mess, which brings me back to the disclaimer, right? This is risky stuff, guys. Know what you're doing. Don't bet the ranch. Just don't do it. All right? Hey, peace and love to everyone. Bye.